Good morning, this is Claudio Lugini speaking in alias the eToro alias is EquitiesFund. So as promised on my chat, I'm trying to explain to you the hedging on eToro account. So we start with the cases of no hedging. So if your domestic currency is euro and you know that the eToro account currency is US dollar, so there is a difference on the currency. So what does it mean? If I want to transfer some money for my bank account to eToro account, and today the change rate of euro US dollar is 1.2, it means that if I want to transfer 10,000 euros, this 10,000 euro on my bank account will be 10,000 euro multiplied by 1.2 will be 12,000 US dollar. So now on my account, eToro account, I have $12,000. So I apply my trading strategy, and after, I don't know, 2 months, 1 year, etc., I gain 1,000 US dollar of profit linked to my trading strategy. So I have now on eToro account 12 plus 1,000, so I have 13,000 US dollar. So now I want to withdraw old money from eToro account and put it in my bank account. So my bank account is in euro. What does it mean? I have 3 cases. 1, 2, and 3 cases. One case is if euro US dollar is still 1.2. Second case, the change rate is 1.05, and last case is 1.35. So in these cases I withdraw 3,000 euro, so divided by 1.2, dollars, and I have in my account more or less 10,800 euro, so in my bank account. Second case, 3,000 of US dollar divided by 1.05, so I have 13 divided by 1.05, so I have 2,400 more or less euro on my bank account. Last case, 13,000 US dollar divided by 1.35 of the currency exchange. So now I have 9,600 euro. Okay, you can see that depending on the euro US dollar rate, you have different money on your euro bank account. You have 2 cases positive. This if the euro US is still a 1.2. This, so you have a double gain here, one from the profit of your strategy and another one because the euro US dollar is decreased, so you have even a better more money on your bank account. But there is a third case, that if the euro US dollar go up, so you have less money of your bank account in euro compared to what you have transferred in eToro. So you have a loss. So yeah, you have lost money here. So what does it mean? Without hedging, you have a possibility to lose money even if you had a profit on your trading strategy. So you had a profit of 1,000 US dollars for trading, but now you have lost because the change of euro US dollars is different. So you have done a lot of trading, you have maybe you was good, but now you have lost. So case number 2, same with hedging. So domestic currency is euro, eToro account currency is US dollar. Today euro used is, for example, 1.2. You want to transfer 10,000 euro, and this 10,000 euro will be on your eToro account 12,000 US dollar. So you want to hedge. You use only $6,000 for trading, and you use the other $6,000 for hedging. So in this case, you use a leverage. So $6,000 with leverage 2, it means that you are investing on euro US dollars 12,000 US dollar, and with this money you buy euro US dollar. Okay, with the other $6,000 you do the same strategy as before. So before, with 12,000 US dollars you gain 1,000. Now with the half you will gain the half. So with 6,000, so the profit will be 500. Okay, now case number 1, case number 2, case number 3. Euro USD is 1.2, euro USD 1.05, euro USD is 1.35. So if we think only of these, so in case number 1 you see that 1.2 is still 1.2, so you have no change. So the profit on euro USD is equal to 0. Here the profit on euro USD will be, so the exchange rate is from 1.2 to 1.05. So this means it's a difference of 0.15 multiplied by what you have invested. So now you have a loss of 1,800 US dollar. So it means loss because you bought the euro US, but the euro US is decreased from 1.2 to 1.7. Here you have the profit on euro USD is more or less the same. So 1.35 now minus 1.35 minus 1.2 multiplied by 12,000. So you have a gain of 1,800 US dollars. Okay, so if we now want to transfer our money from eToro account to our domestic bank account, so it means that now I have $12,000 That's what I started with, plus the money I gained from the trading, 500, plus the profit on Euro US, so it's 0. So the sum is $12,500, and if I transfer, I have to divide it by 1.2, and the total is 12,500 divided 1.2. So you have in your account, this is euro, 10,400 euros on your domestic account. In this case, you have 12 US plus, this is also US dollars, plus 500 US dollars because of the profit, and the loss of the on Euro US, so minus 1,800. So it's 12 plus 500 minus 1,800. So you have 10,700 US dollar divided by 1.05, because now the Euro US dollar is 1.05. So if you want to transfer now, you have to apply this exchange rate. So now on your bank account, domestic bank account, you have 10,200 euros. Perfect. Last case, 12,000 US dollars plus the trading profit plus the profit on Euro US dollar. This means that 12 plus 500 plus 1,800, so you have 14,300 US dollar divided, if you want to transfer at this rate, 1.35, 10,600 euros. Okay, so you can see that in all of these three cases, you have a gain in your domestic account in all of these cases. So if we want to compare case number 1, case number 2, case number 3, so in this case you have always a profit. In this case there is a case where you have a loss. So this is the hedging. In this case you have no risk for Euro US dollar exchange. Here you have the risk here in this case. So it's just your choice. If you want the risk, okay, you can do it. If you don't want the risk, you have to hedge. There is no correct answer. So last tip is that, for example, if your domestic currency is yen, you know that the exchange is US dollar yen. This is the opposite of Euro US dollar. So you have here on the right part US dollar. Now you have on the left part the US dollar. So you don't need to buy. But in the case of yen, you have to sell US dollar yen. And that's all. Bye.